On behalf of the 45 partners and staff of Mairs Power, we are truly honored to be at the premier Twin Cities business event. It is just wonderful to be allowed to be in a forum like this. We're just absolutely thrilled, so thank you for that. You know, since I've been invited, I've thought a lot about my time at the Carlson School and the importance that it played. You know, going back into the early 80s, I had my first job as a computer programmer for EDS. I was in Washington, D.C., great job. However, pretty quickly came to the conclusion that I wanted to do something else, and my focus was shifted to Wall Street. It became clear that I would need something more than an undergraduate in business and computer science to be able to break into the field, and so I started my search for the right program for me. As I was looking through some of my old files, I found my GMAT scores, and I found that I had sent them to the University of Michigan, Wisconsin, St. Thomas, and Minnesota. And clearly, one of the things that I came to the conclusion of, I wanted to be in a community that had opportunities in investments, and Michigan and Madison, not so much. The Twin Cities, of course, had all sorts of opportunities for me to potentially break into the investment area. I chose Minnesota because I felt like I needed a degree with a national reputation. The St. Thomas program was getting started at that point, and I have never regretted that decision. It worked out extremely well for me. Shortly after graduating from the Carlson School, I got my first offer to be a quantitative equity analyst at the St. Paul companies. So I got that break that I really needed. You know, that statement that I took my career seriously enough to get an MBA, and then got that position as an equity analyst. But I would also say that what I really got from it were the tools to be successful. I learned the things that I needed to become a successful equity analyst, portfolio manager, fund manager, and now leader. So I am so grateful for everything that I've learned at the Carlson School, and I consider it to be the very most important investment that I've ever made in my own career. Now, it's also important beyond myself. It's been very important to Mairs Power, the firm. I'd like to introduce George Mairs Jr., the founder of Mairs Power. And George had a wonderful story. Right after graduating from college, he joined the family business. His family owned the Emporium department store in downtown St. Paul, a successful business. They sold a lot of goods, but the thing they really focused on was pianos and sheet music, which was a very solid business at that time. People would entertain themselves. Keep in mind, this is in the mid-1920s. They would entertain themselves with piano music and a key part of the family life back then. However, George was concerned about this emerging technology called radio and what it would do to this family entertainment business. And so he convinced his family members that they should sell the business. And in the mid to late 1920s, valuations for retail were at very high levels, and so did an excellent job of doing that. But I never met George, but I like to think that he and I are similar, that we saw this view of an opportunity to be in investment management. And George came to a very similar conclusion that I did, that he needed the tools, and he went to the University of Minnesota to get a master's degree in corporate finance, and thus began a successful career. Once he graduated in 1931, he hung his shingle. Now, 1931, interesting time. It was a lousy time to start an investment management business. However, it was a phenomenal time to invest. And George really cut his teeth on investing in corporate bonds, particularly railroad bonds, and was very successful at doing that. So the reputation of Mairs Power really started there. Next, I'd like you to meet George Mairs III, the son of the founder. And George actually spent a lot of years here on campus. He was an adjunct professor at the University of Minnesota from 65 to 85. I actually meet a lot of people who have had him as a professor and speak highly of his role as a professor here. Now, the reason why it was so key to Mairs Power is in the late 1970s, a very difficult period for our economy, recessionary, and markets were down big. Mairs Power was struggling. And as a matter of fact, the company was having difficulty making payroll. The way that it was able to make payroll is by George not taking a salary. And he was able to do that because he had this other position as a professor at the University of Minnesota. So in some senses, Minnesota is really key to the fact that Mairs Power is still around. Moving forward, I'd like to show you the investment committee, today's investment committee at Mairs Power. This is key individuals at the firm. These are the people that do the equity and fixed income research. They make the purchase and sale decisions, they manage the portfolios, and they manage the funds. So clearly a very important team of people. Actually, I've got a number of them here. Members of my investment committee, would you mind just raising your hands to be recognized? Right here near the front. So half of them are here today. The other half are in Des Moines and in Chicago doing research. But as you can see, the University of Minnesota is prime ground for getting some of the very best people that we can find to be the core part of Mairs Power. Going forward, the University of Minnesota plays a key role in our investment process, but I'll get more on that later. First, I'd like to just give you a little bit of background on Mairs Power. Some of you may be hearing about us for the first time. Again, we were established in 1931. Our first mutual fund was in 1958. And what happened there was that we had clients, and our clients would have family members or friends who wanted to participate in the Mairs Power style but didn't have the minimum, which at the time was $100,000. So we created this mutual fund so we didn't have to say no to them. It was never meant to be, the big part of our organization. It was meant to be a convenience for our clients. But this was the early days of the mutual fund. As a matter of fact, the growth fund, when it was established, was one of only 100 mutual funds, no-load mutual funds in America. 3 years later, we created a balanced fund that was more appropriate for people that were at or approaching retirement. And in 2011, we created a small cap fund. Now, the small cap fund, we've actually done a very good job in Minnesota of identifying emerging growth opportunities, companies that were based here, a good job at it. When we established the small cap fund, I'd say now we're excellent at it, owning these companies in this small cap fund, the ones that could ultimately be in our clients' accounts and in our growth fund. It's really driven that for us. This is the way we look right now. So almost $10 billion of assets. Our legacy advisory business, that's where we manage money for wealthy individuals and institutions. 40% of the business. The growth fund has been our largest product by far for a long period of time. We've benefited just beautifully from some positive press, Forbes magazine, Fortune magazine, Morningstar, and the growth of the mutual fund industry. And so, quite a bit bigger than we would have ever expected when we started the fund back in '59. Balanced fund, a specialty product at almost $1 billion of assets, plays a key role in our for our firm. The small cap fund at $400 million. I remember sitting down in 2011 with the manager who was telling us we should do this, Andy Adams, who's now our chief investment officer. And boy, if we could just get this thing to $25 million, it would be a huge hit. We've just been startled at the success. It was one of the more successful launches in the history of the mutual fund industry. I wanted to mention, though, that our industry is under siege to some extent, a very significant challenge, and it has everything to do with this active versus passive debate. And a few of the prevailing wisdom right now, active managers on average can't outperform their indices. That is true. Even if some active managers can outperform their indices, there is no way for investors to identify outperforming managers in advance. And that actually I would disagree with, and I would like to give you a few thoughts on why that happens. So the debate. It's pretty clear from this chart who apparently is winning this debate. Here's a 10-year chart of cash flows. Above in black is into passive equity funds, and the blue one going downwards is out of active equity funds, a move of $1.3 trillion. So it's something very important is happening here. I actually get asked a lot. So I suppose you're opposed to index funds, and the answer is absolutely not. I think that the index fund was one of the most important creations in the financial services industry since the mutual fund. And the mutual fund industry have really created this opportunity for index funds. The industry has created too many funds that hold Too many stocks that trade too often and that are too expensive and ultimately don't perform well. What's happening here is capitalism at work, systematically eliminating mutual funds that just simply should not exist. So I believe they play an important role. However, I will say that there is a place for active management. We've carved out, we think, a nice and defendable niche and have grown through this period of time. And the keys, we think, are to look for a strategy that you can believe in, monitor that your manager is continuously employing that strategy, not straying from it, and also watch the fees. Watch them closely. Anything percent or more is too much. Move on. 3 pillars that we build our process on. We're long-term investors. We buy and hold companies for a very long period of time. The typical mutual fund in America right now has turnover right around 100%, which means they've got a 1-year holding period. We have turnover that's generally less than 10%, often less than 5%, implying a 10 to 20-year holding period. So we are all about buying great companies and expecting to hold them for a long period of time. Our growth fund is a multi-cap investment. That's something that's a throwback. Everybody right now, active managers, put themselves in a box. They're large cap growth, they're mid cap value, small cap core. We ignore that because we want to invest where the opportunity is. Sometimes all large cap stocks are expensive, and so we'll gravitate down to small cap. And that's been a key part of our process and a key portion of our success. Our regional emphasis is very important. We get to know the companies we invest in real well. The opportunities that are created by just living in these communities are absolutely huge. On top of that, we've got a process in place. We are looking for companies that deliver above average returns, have above average growth, but then have something we call a durable competitive advantage. As you can imagine, companies with above average growth attract a lot of attention in the form of competition. And we're looking for companies that have something that Warren Buffett would call a moat, something that really makes their earnings sustainable into the future. Now, I could go into detail on each of these pillars in our process, but today what I'd really like to do is just focus on our regional emphasis. And as Sri mentioned, you know, we do invest heavily in companies that are right here in Minnesota. And that's been the case for a long time. Looking at the growth fund back in 1958, Minnesota Mining and Manufacturing, we've held this stock continuously for over 60 years in the growth fund. A couple others that are no longer in the fund, but going forward to today, 48% of the Mairs Power growth fund is invested in companies that are headquartered here in Minnesota. We've got also some exposure around the 5 states surrounding Minnesota, so 60% is kind of a regional focus. And why would you do that? Why would you focus investing on one state? Well, that's going to be the argument here, and I hope that at the end you agree with why we do that. There's some real advantages to investing in companies in Minnesota. Human capital is a key one. We've got some of the best people here. The University of Minnesota, I promised I'd get back to it, I definitely will. Economic diversity, a lot of cities that are really focused on 1 or 2 industries. We've got diversity across a wide range of industries. That is a key advantage to Minnesota. But we also have a dominant position in some key verticals, healthcare, agriculture, industrial. We are sustainable. We think that some of the long tail advantages that Minnesota enjoys now will last well into the future, and we are competitive. So these are just some of the companies that we invest in. The largest are the Fortune 500 based here. These are all names that you're familiar with. The next list are some of the Fortune 1000 companies, ones that we're all very familiar with. Now, this is an audience that recognizes this. I love putting this up in New York and in San Francisco, and it's like, what? These are on the Twin Cities, and it continues now with large private companies. Now, we can't invest in private companies, but we believe they play an important role in the whole infrastructure of the Twin Cities, and so I definitely want to highlight them here. Kind of moving down into the mid-cap and smaller companies, this is a core part of our portfolio. So we invest in companies that have been around for quite a period of time, but are still small enough to be able to be nimble and to grow faster than the economy as a whole. And Bio-Techne, Ten, and Graco are great examples of that. And then with our small cap fund, we're looking for companies that are going to develop a durable competitive advantage over time. And so we're early in on names that we think can be the leaders of tomorrow. All right, so just a quick look at Minnesota. It's a passing look. You could easily pass it over. A population of 5.5 million. Puts us in the middle of the pack of states. However, $378 billion GDP, our GDP per capita is well above average. We like to think that Minnesota punches above its weight. And unemployment, 30 years of unemployment less than the national average. And 16 Fortune 500 companies, again, $5.5 million of population. Some other key advantages that I'm highlight on the right is volunteerism and charitable giving. Minnesotans are very focused on their community and are willing to work hard and to give of their treasures to keep that up. We think that's a key advantage, and that's delivered through the arts, which we really enjoy some of the best arts, certainly for a community our size. And we don't spend the whole time watching movies or going to plays. We do spend a lot of time working on innovation, and the number of patents that are created out of this state are really quite impressive. All right, economic diversity. We think that's important. It softens the edges. We don't experience the wide shifts in the economy. That's one advantage. I'm going to get into another one here, but here's a couple examples. San Francisco, probably the most productive commercial center in the world. A lot of companies that are based there, S&P 500, 56 of them. The one thing about San Francisco, very skewed towards one sector, that's information technology. And you hear about how great San Francisco is when technology is in favor. You hear less of it, of course, when it's not. Boston, again, a very productive center, very focused on healthcare. And so they do not enjoy that kind of diversity. And Houston and Detroit, two strong centers, not quite as impressive as San Francisco and Boston. Look at the lack of diversity there. Houston, of course, the energy space, and Detroit in the automobile production. And then compare that to the Twin Cities, that even distribution across most of the important economic sectors that are in the S&P 500. And that's important in a number of ways. Professor Miles Shaver, we've had the opportunity to meet with him for quite a while now, even before he came out with the Headquarters Economy book. And the thing that he shared with us that we really had not fully appreciated until he talked to us about it is the virtuous cycle that happens in a city that has so many headquarters and so many different industries represented. And now, since talking to him, we have been spending a lot of time when we interview the companies that we invest in, how does that work? And we are seeing it at play every day. And what Professor Shaver means about that is that the C-suite executives are considering moving to the Twin Cities will view this as a low-risk place to be. So let's say they take a job at General Mills. They do that thinking, okay, well, if it doesn't work here, there's other opportunities. There's Cargill down the road, a short drive to Hormel. So if things don't work out there, there's other opportunities, and so multiple companies within industries. But what ultimately ends up happening is key people move not just within industries, but through different industries. And that's a great opportunity for them to be able to stay in a community which they're now raised in a family. However, think about what they bring with them. They bring best practices with them from different industries, and we see that a lot, and we think that that is having a major impact on the success of the companies that are based here in Minnesota. And lots and lots of examples. I would like to mention my favorite one today is a company called Bio-Techne. And the CEO of Bio-Techne, electrical engineer by training, and spent 23 years at 3M, where he probably got about the best management training that you can possibly get on earth. He is now leading Bio-Techne. The CFO similarly had spent 7 years at Honeywell Aerospace, and again, bringing best practices from industrial into a healthcare distribution setting. The Bio-Techne has been the best performing mid-cap stock in Minnesota for the last 5 years. All right, a few things. We have a well-educated and stable workforce. Our labor participation rate is great. Our K through K-12 system, top 10. Love to see that back at number 1. That's something we got to keep a close eye on. You know, a key advantage for us is the quality of the education here, and it starts at K through 12. So we consider it still to be an advantage, but something that we don't want to take for granted. 200 plus post-secondary institutions. A chart that I pulled out of the Headquarters Economy book just shows the stability of our workforce. So we're right in the quadrant that we want to be. We are building, you know, growing at a solid pace, but not a spectacular pace. We'd always like to grow faster, but the key is that we don't have the out-migration. So we're building and expanding, but we're not building and churning. So that I think is representative of our stable workforce. And just one final plug, if you haven't read the Headquarters Economy, I strongly recommend the book. All right, University of Minnesota. Why is that a key part of our process? What makes the University of Minnesota so special? Number one, University of Minnesota is a land grant university. As you might recall, back in the mid-1800s, Congress created land grant universities for the purpose of making the United States competitive in industry and to supplement what's going on in the individual communities. I would suggest that deep within the DNA of the University of Minnesota is that desire, that need to support our community. And if you doubt me on that, when I would suggest that you take a look at the results from the Office of Technology Commercialization. I would also suggest that you look at the programs that are being offered at the Home Center for Startup Businesses, or just attend the Minnesota Cup, and you'll know exactly what I'm talking about. So a land-grant university tied to the community. Very productive on a research standpoint. And $8.7 billion of economic impact, $900 million of annual research. So among the top institutions, certainly public institutions in the United States, but quite a few land-grant universities that are doing a lot of great research. Minnesota is unique in the sense of where it's located. A lot of those other schools are on these beautiful settings on a nice hill somewhere far away from traffic where it's nice and quiet. The University of Minnesota is set right in the middle of a commercial hub. That's what I think is the third leg of that stool that makes the University of Minnesota really quite unique. And we see that when we are investigating the companies that are based in Minnesota and how important the University of Minnesota is to these companies. All right, so there's 3 verticals that I just want to mention. Agriculture, right down to you know, the early history of Minnesota. Agriculture has been important. Of course, we produce a lot of grains here, and for a while in our history, we consolidated the grains and shipped them out, and then we would ship back finished products. Now, we had access to the rivers. That was important. You know, a real important development was the creation of the Great Northern Railroad, which gave this community access to the Asian markets. Shortly after that railroad was created, Minnesota went from a big importer of finished agricultural goods to one of the biggest exporters in the world. So I would say that you know, not only do we still have a big part of our economy based on agriculture, it's really driven this whole mentality of how we export to the rest of the world. All right, healthcare. You've all heard the story. The healthcare device industry was born in Earl Bakken's garage, and we continue to dominate that industry. Medtronic, Boston Scientific, Abbott, also 3M and Ecolab play key roles there. We have the #1 hospital. I'm not even going to argue with anybody about that. It's the Mayo Clinic, and they're near our community and play a key role for us. Also the largest private health insurer, United Health Group. They're huge within their core business, but also the data analytics that they're doing, I think, ensures that they will be a leader going forward. All right, industrial. People don't normally think of the Twin Cities with industrial, but I would say that we are spectacularly good. We have done well by exporting. We have also done an excellent job of staying ahead of the commoditization curve. So, you know, a lot of places will have their industry, whether it's steel or whatever. When the business ultimately gets commoditized, it ends up being a drag. The companies here have just a history of always adding value to their products. 3M, Pentair, Donaldson, Toro, a newer entrant, Proto Labs, really are amongst the best, we think, in the world. All right, sustainability. We've got a great natural environment. We've got a plan for renewable sources of electricity. And we have a long-term plan. I think that's really key that, we certainly have our issues and nobody agrees on everything about our long-term plan. Having a plan is important. Our central location for transportation. I'm going to argue that MSP International Airport is the best airport in America. Thank you. Okay, a couple people agree with me. I mean, some people maybe have a different opinion, maybe have been delayed a few times, whatever. But the reason why I say that is because they did an excellent job of placing this airport 4 hours or less from every place in the continental United States. That is a huge advantage. You can be on either coast and do a meeting and come back either that night or the next day. You can't do that from the other coast. That is a big advantage for us. All right, Minnesota is good for business. We have a history of successful companies. We have extensive infrastructure. We think that we're ahead of the game there. Another area that we need to keep our eye on. We don't want to fall behind there. It's just so important for us. We're in the middle of the pack from a business taxes standpoint. A lot of talk about personal taxes. We're certainly not in the middle of the pack there. We're in the high end of taxes. But for companies that do most of their business outside of Minnesota, we have a relatively attractive climate from a taxation standpoint. Modern transportation network, the river still exists, our rail access and the transportation. We talk a lot about the public companies. That's very important for Mairs Power and for our clients, but I also talk about the success of startups. We've got a very good history of starting up companies. The one thing that I think is really interesting is the startup survival rate. So companies that start up tend to make it longer here or really survive those first 3 years, which is obviously a time that's very critical for small startup companies. And so we think that the advantages extend well beyond the public companies. All right, so I made the statement that Minnesota has been a great place for investors here. I'm going to just prove it. Here is the S&P 500 over 20 years. And here overlaid is the Piper Jaffray Minnesota Index outperforming over a longer period of time. So over those 20 years, outperforming the S&P 500. And so, it certainly has outperformed in the past. And here's the Mairs Power Growth Fund. We've actually outperformed both of them. Kind of back to my argument that not everything needs to go passive. There are strategies, and it's not just ours. We think that there's a place for active management, and the fact that we've outperformed the S&P 500 and the Minnesota Index is important. Now, of course, you don't need to hire Mairs Power to buy Minnesota stocks. I would tell you that if you like to do your own investing and you're considering two investments, they're similar, but one of them is Minnesota, I would suggest you pick the Minnesota stock. You've just increased your odds of being successful. All right, going forward. Minnesota continues to move. I mean, we're not sitting still. We are working hard to make Minnesota a great place. We believe that those long tail advantages will continue to outperform the United States, and so continue to be all in with Minnesota. I would like to just kind of finish up here with one thought. As CEO of the company, and you've heard me talk about how important the long term is. One of the things that I do to gauge how well we're doing as an organization is look at the longevity of our client list, and we've done an excellent job there. We've got a lot of very long-term clients in an industry where the typical length of a advisor-client relationship is 5 years. Our history is multiples of that. Most of our clients don't actually ever leave us. They just pass their assets on to their beneficiaries. I'd like to close by thanking all of you for being here, for the opportunity to tell you a little bit about Mairs Power, and and it's just been an absolute delight to be able to speak to you today. So thank you. I think we've got time for a question or two.
So we've got 3 microphones around the room. Please raise your hand if you have a question, and we'll come to you.
Hi. Hello. I'm curious. What do you think? I mean, you obviously come from the investment side. It was excellent presentation, phenomenal. Love the story about the region. But looking on your industry, what do you see your product is, and how do you see it's changing with the evolving technology, and where your challenges are lying going forward?
So changes within my industry. I expect the move from active to passive to continue. So that trend is in place and will continue. There's some interesting things going on, though, in terms of from new products. They're called ETFs, exchange traded funds, and perhaps there are opportunities for active managers to be able to use exchange traded funds. A number of advantages to ETFs is that you don't have to wait for the close of market and then get that one price. You can trade an ETF through the day. Some investors think that that's valuable, but they also are beneficial from a tax standpoint. They generally don't deliver realized gains on an annual basis, whereas mutual funds have to do that. So that's something we're keeping a close eye on, and perhaps an opportunity for Mairs Power going forward.
Hi, I'm an investor in your funds.
Thank you.
Yeah. Can you say anything about your investment in Alphabet or Google? I know it's probably not, typical company you'd invest in, but I'd like to hear any thoughts you might have on that.
Yeah, so we do have a very large position in Alphabet, the parent company of Google, and how does that fit with your regional strategy? It does not. Now, we have always been willing to invest outside of the region, particularly if there's industries that are underrepresented in the Twin Cities. So we saw this as an emerging trend. We've owned Alphabet for quite a few years now. And so, did our work there. It really fit our process. Above average returns, above average growth, significant durable competitive advantage. So, we're not creating additional Google. So from the standpoint of how it really fits in our process, it definitely fits in our process. I will admit, though, that we don't have the kind of access to management at Alphabet than we do to, say, a 3M or a Graco, and so we have to live with that. But I would argue that it fits just firmly within our overall strategy. Thank you for the question. Thank you for your investment.
Hi, and thanks for your time today. The healthcare industry is a big change here in St. Paul. The Health East name is going away. It's going over to University of Minnesota. The second part of my question is, what's the threshold to buy into your company if we want to do that? And the third part is, I'd like to hear your comment on President Trump's new China agreement, and to see if the investors are positive for that. So the stock market has really taken off now this last week and a half. It's doing great, but it's really taken off the last week and a half or so. Any comment?
Certainly. So healthcare, we're very bullish on healthcare. We've got a number of stocks that are on our buy list. The industry has actually underperformed quite significantly recently. A lot of that has to do with a couple Democratic nominees who are talking about Medicare for all. We are making the bet that they will not be successful at creating that, and that we think that the opportunities there are really quite extraordinary in that healthcare space. So bullish on healthcare. The private companies, in terms of where they're located, I don't have a lot of comment on that. I do believe that we've got an excellent healthcare system here. I'm very grateful for that. The new China agreement, certainly it was bound to happen. We've been waiting a while for it. Apparently this was going to be easy, but we're making some progress there, and I ultimately think that we'll get something that makes a lot of sense, and I think that has a lot to do with why the market has been strong here. So I mean, we're bullish on that. Industrials have been performing particularly well. 3M over the last few days has really bounced back nicely.
Thank you so much.
Yeah, thanks again.